For decades, we've been told that global power is decided in Washington, Beijing, and Brussels. But if you quietly follow where the money, data, and energy contracts are flowing, a very different map emerges. On one side, you have Canada, resource-rich, politically stable, sitting next to the world's biggest consumer market, but constantly squeezed between U.S. demands and Chinese leverage. On the other, a country smaller than Nova Scotia, the Netherlands, a logistics superpower, home to one of the world's most important chip ecosystems and Europe's preferred gateway for capital and trade. Between them, a web of agreements in hydrogen, semiconductors, defense, and finance has quietly turned into a corridor worth well over $100 billion. A corridor that doesn't run through Washington at all. This isn't about a single port or pipeline. It's about who writes the rules of international trade, who shapes economic policy, and who manages future geopolitical risk when the next crisis hits. So the real question is, are Canada and the Netherlands building a back channel that could outlast and outmaneuver both the US and China in the next phase of the global economy? Welcome to GeoCapitalist, where geography meets money. Today's video dives into the geopolitical game changer, how Canada and the Netherlands are rewiring global trade and finance. We're unpacking a quiet but consequential power shift. If you appreciate deep, steady analysis, subscribe and stay informed. Most people still see Canada as a junior partner to the United States, and the Netherlands as a quaint European trading nation. But if you zoom out and look at capital flows, they start to resemble something very different. A strategic pair of hinges between continents. Dutch investors hold roughly $180 billion in Canadian assets on paper. Even after you strip out tax routing, you're still left with a massive pool of real capital tied to energy, logistics, and high-value industries. Ask yourself, why would a small European country accept a trade deficit with Canada after CETA, while the rest of the EU maintains a surplus? Because they aren't playing this quarter. They're playing the next few decades. For an older viewer who's watched empires rise and fall, this raises a deeper question. Isn't long-term control over capital and standards more durable than short-term trade balances? CETA is usually framed as a regular free trade deal. But for Canada and the Netherlands, it's become something more subtle, a legal and regulatory scaffolding for a private capital corridor. By ratifying CETA early, the Netherlands effectively volunteered to be Canada's preferred rule of law entry point into the EU. In return, Dutch firms gain early stable access to Canadian resources, infrastructure, and financial services. This matters because in an era of tariffs, sanctions, and weaponized supply chains, rules are a form of power. If your contracts are structured under Dutch and Canadian law, you've diversified away from unilateral US decisions and from opaque Chinese systems. Here's the idea that forces a pause. When future trade disputes hit, whose arbitration systems and legal frameworks will quietly decide where billions move and which investors sleep well at night? On the surface, green hydrogen agreements between Newfoundland and Dutch ports look like climate policy. In practice, they're the backbone of a 20 to 30-year energy relationship. Europe needs reliable non-Russian, non-Middle Eastern energy. Canada needs long-term buyers for its clean power and hydrogen projects. The Netherlands provides the infrastructure, storage, and distribution into the EU grid. Every offtake agreement signed, every terminal expanded in Rotterdam or Amsterdam, locks in a future cash flow and a future dependency. So ask yourself, when financial markets start pricing long-term contracts, who quietly gains leverage? The country that supplies molecules, the one that owns the terminals, or the one that writes the insurance and financing terms? Energy isn't just about today's price per kilowatt hour. It's about who controls tomorrow's network. Most of the world associates Dutch tech with one company, ASML. But the ecosystem around it, photonics, precision engineering, advanced materials, is where Canada quietly plugs in. Recent science and innovation agreements between Ottawa and The Hague explicitly target semiconductors, quantum technologies, and photonics. Dutch delegations visiting Toronto weren't just sightseeing, they were mapping talent, research hubs, and critical mineral suppliers. In a world where the US is trying to contain China's chip ambitions and China is racing to close the gap, Canada and the Netherlands are carving out a complementary role in the value chain. Here's the question that really matters. If you were managing a pension fund or sovereign wealth fund, would you rather bet everything on the US-China technology tug-of-war or allocate a slice to a quieter, rules-based corridor built on complementary strengths? Defense cooperation usually conjures images of troops and flags. But the real power lies in industrial capacity. Who makes what, where, and under which contracts? Within NATO, Canada provides geography, Arctic access, and resources. The Netherlands contributes logistics, governance experience, and integration into EU defense supply chains. Together, they form part of a procurement and innovation ecosystem that doesn't have to run exclusively through US giants. As NATO pushes into cyber, AI, and energy resilience, contracts and standards will increasingly sit at the intersection of military and civilian infrastructure. The question is, when the next crisis hits, whether in the Arctic, the Baltic, or cyberspace, whose factories, shipyards, and data centers become indispensable, and who sets the terms of access? That's defense policy as long-term economic policy. Beyond ships and pipelines, the Netherlands functions as a switchboard for both data and money. Amsterdam is a major internet hub. Dutch law underpins a surprising number of holding companies and investment structures touching Canada. For Canada, routing capital and digital infrastructure through the Netherlands offers an alternative to relying solely on US platforms and clearing systems. For the Netherlands, anchoring Canadian flows strengthens its position inside the EU as a financial and digital hub. In an age where sanctions can freeze assets overnight and cyber attacks can shut down pipelines, diversification of financial and data routes is its own form of geopolitical risk management. Here's another question that deserves a moment. If the US or China weaponizes access to their systems, which countries quietly keep the lights on, the data flowing, and the payments clearing? This emerging Canada-Netherlands axis isn't about replacing the US or China. It's about middle powers refusing to be just price takers in trade, energy, and tech. By aligning capital, infrastructure, and rules, they tilt the playing field in favor of investors and states that value predictability, transparency, and diversification. Who gains? Long-term investors seeking stable jurisdictions. Canadian regions tied into hydrogen, critical minerals, and tech clusters. Dutch ports, legal systems, and digital hubs. Who quietly loses? Intermediaries who once profited from every container, every data cable, every financial transaction passing through US-centric systems. So, as someone who has watched multiple cycles of globalization, ask yourself, is this the early stage of a broader pattern where mid-sized, high-trust countries quietly accumulate structural power? Over the next 10 to 15 years, we're likely to see more tariffs, more sanctions, and more fragmentation of the global economy. But beneath the headlines, corridors like Canada-Netherlands will determine who can keep trading, investing, and securing energy without choosing absolute sides. For policymakers, this is a blueprint. Pair resource strength with logistics and legal sophistication. For investors, it's a signal to look beyond headline superpowers and toward the quieter junctions where capital, data, and energy intersect. The core insight is simple. In a world of visible confrontation, invisible infrastructure, legal, financial, and technological, becomes the real battlefield. So, when you think about the geopolitical game changer, how Canada and the Netherlands are rewiring global trade and finance, the real question isn't whether Washington can stop it. It's whether the rest of the world even realizes how much has already shifted. You've just seen why Canada's $180 billion Netherlands partnership is rewiring global finance. This isn't about one headline deal, but an entire architecture of energy, technology, defense, and finance being quietly rebuilt. For an older generation that has watched several New World orders come and go, the pattern here should feel familiar. Real power moves first in contracts, standards, and capital flows, and only later in speeches. But here's what most people miss. The real significance of this Canada-Netherlands alignment isn't that it's anti-American. It's that it's post-American in a very specific way. For decades, every major trade route, every energy contract, every tech standard had to flow through Washington's approval, or at least its tolerance. That era isn't ending with a bang. It's ending with a whimper, replaced by 1,000 smaller corridors like this one. When you see hydrogen offtake agreements signed, semiconductor research partnerships formalized, and NATO defense contracts quietly restructured, you're watching the global economy physically reorganize itself. The geopolitical risk isn't a crisis, it's a recalibration. For investors, this matters because capital follows infrastructure. For policymakers, it matters because economic policy is now written in boardrooms and research labs, not just in government buildings. And for citizens like you, it matters because the stability of your pension, your job, and your purchasing power increasingly depends on which corridors your country is plugged into. The Canada-Netherlands partnership is one of dozens emerging right now. Some will succeed, others will fizzle. But collectively, they're reshaping international trade, financial markets, and the entire architecture of how nations compete and cooperate. So here's my question to you. Which part of this corridor do you think will matter most when the next shock hits? Hydrogen, semiconductors, NATO integration, or financial and data routing? Let me know in the comments, because your perspective helps shape where we dig next. If content like this, clear, evidence-based breakdowns of the global economy and geopolitical risks, adds value to your understanding, watch our next video. It connects directly to what's unfolding. Subscribe to GeoCapitalist and share this with someone who still thinks only superpowers matter. Thanks for watching, and we'll see you in the next video.